Hi, welcome to Curious Bricks. Today we're going to talk about Intuit Inc., ticker symbol INTU, Q2 2021 earnings report. Intuit is part of S&P 500 index under the technology sector. The company's earnings call was hosted on February 23, 2021. Before we dive into the financial details, let's take a quick look at some key statistics. As of March 26, 2021, Intuit share price was $376 and its market cap stands at $103 billion. The trading price earning ratio is around 57. Forward dividend is $2.36 per share or 0.6% yield. As of March 15th, the short interest ratio of total floating shares is only 1%. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q2 2021, Intuit reported total revenue of $1.6 billion, which is 7% lower than the same quarter last year. The revenue decline is primarily driven by a weaker consumer segment. In this quarter, Intuit's G&A expense also increased substantially by almost $100 million. Overall, the company reported total operating loss of $25 million. Intuit also published the revenue breakdown by product segment. We are seeing in this quarter, SMB segment had solid growth. Its online ecosystem revenue grew by 22%. By contrast, the consumer segment had significantly lower revenue due to late IRS opening for this tax season. Lastly, Credit Karma acquisition was completed on December 3rd, which resulted in roughly 2 months worth of revenue recognized in this quarter. Now moving to the balance sheet. Intuit further reduced its cash on hand by over $3 billion due to the cash payment for the Credit Karma acquisition and repayment on short-term loan. Meanwhile, long-term debt remained the same at $2 billion. In summary, the company's liquidity seems sufficient. In this quarter, the management provided a general update on Credit Karma and its growth strategy. The management laid out the 3 key focus areas for future growth. The company also completed the acquisition of OneSaaS in early February. OneSaaS is an infrastructure platform that integrates data streams from multiple sources of e-commerce platforms. Additionally, the management reviewed its capital allocation plan. In Q2, the company completed $175 million worth of share repurchase and still has $2.2 billion authorization remaining. Lastly, the management provided guidance for next quarter and full year 2021. Q3 guidance looks quite strong because it is the peak of tax season. Fiscal year 2021 revenue is expected between $8.8 and $9 billion, or 15 to 17% growth, which includes the revenue of Credit Karma. GAAP operating income will be in the range of $1.92 to $1.99 billion. While non-GAAP operating income will be in the range of $2.97 to $3.05 billion. During the Q&A session, one analyst asked about the recovery status on SMB market. The management commented that SMB recovery depends on geography. US versus UK or different states within US vary in recovery pace. Then different industries are experiencing different level of recovery also. Intuit is seeing the internal indicators are at or above pre-COVID levels for SMB market, with the exception of the number of employees for SMB companies. Several analysts also ask about Credit Karma. There isn't a huge seasonality in the business, but January and February seem a bit stronger. In terms of growing the business back to $1 billion, the management laid out the 3 key growth elements: growing the core, which is credit card and personal loans, expanding growth vertical, which is auto and home loans and insurance, and then emerging verticals, which is money innovation. None of the growth is really coming from the third bucket currently. Currently, the 75% revenue is coming from credit cards and personal loans and 25% coming from the growth vertical, which has really improved versus about a year ago, where it was 95% credit card and personal loans. Intuit is seeing more partners come on and have higher spend because of the innovation with Lightbox and better matching. The overall guidance is based on the trajectory that was assumed for the year. Intuit is investing in Credit Karma. It is a big growth engine for the company in the long run. Lastly, analysts was interested in the synergy between TurboTax and Credit Karma in this tax season. Intuit is still going through trial and error of various opportunities between the large customer base from the two companies. So the management won't expect big impacts from these opportunities in the near term. Now let's take a look at Intuit stock performance before and after the earnings call. Intuit reported revenue of $1.58 billion, missed analyst expectation of $1.75 billion, and its EPS of 68 cents profit also missed the consensus of 91 cents profit. However, the stock had a minor swing after the earnings announcement. Lastly, here is the latest summary of analyst ratings of the company. Currently, there are 22 analysts covering Intuit, and we're seeing more analysts change their rating from buy to hold. Hold represents half of the total ratings. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.